Hi, Hi guys, it's Brittini and Jen here, and as you can see, we are doing this on the road, only because we tried to film this twice, and it didn't work. So, here's third time's a charm, right?
Yeah, I think that means this is going to be the best one yet.
Yeah, I don't know, maybe we've rehearsed it. But today's episode, we are talking about all things finance. I am going to pick Jen's brain because it's been a while since we've talked to an expert CPA on Ambition After Hours.
Yes.
So let's jump into it. But before we get to the hot topic of business and finance and being an entrepreneur, we have to do our highs and our lows.
Yes.
Okay, so you kick it off. What's your high?
My high is that my new floors are being installed on Monday. I'm so excited. When we got our house, the floors were super trash because they had big dogs before us, but we also had big dogs. So we're like, Chuck, Mila, just finish the job, dudes. And did they freaking ever.
Yeah.
So now we're getting vinyl plank, which they will not be able to trash, which makes me so happy. And it's coming on Monday.
Okay, as someone who also has big dogs with vinyl plank flooring, you're going to love it.
I'm so excited I could cry.
Yeah, it's like super hard to scratch. It's like super repairable. Like, oh my God, you're going to love it.
And right now it's this dark one color, like thin board wood, which means it doesn't matter how much you mop it. As soon as anyone steps on it, it's like dirty again.
Oh yeah, it like shows the mark.
Yeah, it just is like, why even bother cleaning at this point? Just like freaking let dirt take it.
Yeah. My high is okay, so I have this bad habit of like every time I go on vacation, I order stuff for the vacation. So like I order like dresses or shoes or like you just want to like feel good on vacation. My high though is now all these purchases are now arriving at my house.
Oh, yay.
In time for my sister's vacation or for my vacation, i.e. my sister's wedding. So now I'm getting like shipment after shipment after shipment of like new stuff and I'm loving it.
I'm so happy for you.
Yeah.
It's nice when you order things on the internet and they actually show up.
Which leads us into Jen's low this week.
I found the cutest Samba mules ever. And I'm obsessed with sneakers, Sambas in particular, Mary Janes, regulars, but I had never seen a mule and I was so excited that I ordered them on the internet and I paid money for them. And you know how Instagram will link to your shop app and like track the order? Mm-hmm. They still haven't come, and I looked on my shop app and it was like no information provided. So I don't think the shoes exist. I don't think they're ever coming. I think someone on the internet just got me to pay $100 for nothing.
What company was it from?
Shoe Warehouse something? But not like the Shoe Warehouse that we all know and love. It was like Shoe Factory Outlet. Yeah, Factory Shoe Outlet. I don't know. I Googled it after because Ryan's like, why don't you just Google the store and buy it directly from them? And it took me to the same place as the Instagram did. But we'll see. Stay tuned. Maybe they'll show up and then it will be my high on the next episode.
You know what? Sometimes it does take like, 4 to 5 business days or whatever for them to ship stuff.
No, we're like solidly into over 2 weeks.
Oh, okay. So I think you should call your credit card company and report that.
But I really want the shoes.
I don't think they're coming.
I mean, put in the comments how long I should wait before I call my credit card company.
Seriously. Okay. Well, my low is along with all of these packages I ordered, I now have to pay my credit card bill. Because things on the, like your like girl math. You're like, yeah, I'll buy it now and pay it off later. As a CPA, you probably don't do that. But
I have CPA math. The girl math part has been beaten out of me.
But let's jump into it because we are going to talk about just being a business owner, numbers and finance, what you should be looking for, key performance indicators, and what reports you should be pulling instead of just opening up your bank account. So, say your business makes $300,000 this year. How much did you really make?
Yeah, I'm going to ask the question when someone says, oh yeah, my business did $300,000. I'm going to be like, cool, fun. Was that revenue? Was that profit? Was that cash in your bank account? Like, what number are you telling me? Because they all mean different things. And some of them mean a lot, and some of them mean zero things. Like your revenue number without any of the other numbers on your profit and loss means zero things. Like, think about it. Do you want to have $1 million in revenue and take 5% to profit, which is the stuff you can spend? Or do you want to have $500,000 in revenue and make 30% profit?
Yeah.
Pull out your calculators, ladies. It is option 2. It is hard option 2. Option 1, you're just working harder and making less. So,
but do you think that's like an ego thing? Like when we start businesses and people like say like, oh, I have $1 million business. Do you think like that's like an ego? Because you're right. You could have a business that makes under $1 million, but you really have a great profit margin, and you could be essentially technically making less than the business that does $1 million in revenue.
More. You could be making more than a business that does $1 million in revenue at half that.
Right.
Yeah, I think it's all about understanding the full picture, right? So like profit is what's left over after you pay everything else that you need to pay. And if you're watching this, I'm going to caveat that by saying profit doesn't need to be just what's left over. You can plan to have it in advance. There's a really great book out there called Profit First. He spends the first chapter making fun of accountants, which I actually enjoy. And he tells you how to plan for the profit that you want. But basically, if you have $1 million in revenue and there's nothing left once you've paid your staff and paid for your product and paid the costs of keeping the lights on, like the overhead, the rent, the utilities, all of that stuff, then you've worked for free. So should we be bragging about that?
No, you shouldn't. But I think as a business owner that's not a CPA, I tend to measure business success not only by the numbers, but sometimes I feel successful when I'm busy, when I have more clients, when I do more orders. But that's not necessarily the case, you're saying.
Absolutely. I think I said this in the last podcast, but that we did on finance, but I'm going to say it again because it's so important. None of your clients are ever going to call you up and say, oh my God, you can't possibly charge me that little because there's no way you're making money and you won't be around to continue to give me great service in the future. No one's going to say that to you ever. It's your responsibility to know. So even if you don't know your profit all the way to your bottom line, you absolutely need to know your gross margin, and you absolutely need to watch it on a regular and consistent basis. Can I talk about what gross margin is?
Tell the ladies what gross margin is.
Okay. So your gross margin is your revenue less any costs associated with directly providing that revenue to your clients. So if you're a marketing agency, for example, your revenue would be the money coming in from your clients, and your direct costs would be the salaries you pay to your designers, the salary you pay to your social media people, and potentially like any of the amounts that you pay for Google ads and things like that on behalf of your clients. If we take our revenue less our direct costs to produce that revenue, we'll get our gross profit number, and that as a percentage of your revenue is your gross margin percentage. What I love about that is those are your biggest numbers on your profit and loss. And we all know the 80-20 rule, right? 80% of your clients, come from 20% of your referral partners, or, 80% of your profit comes from 20% of your effort, all those kinds of things. So if we're going to improve something, if we improve the biggest numbers on our profit and loss, we're going to have the biggest gains the fastest. Like you buy 10 less pens and you save $10.
Right.
You add 1% to your gross profit margin, and that efficiency multiplies with every additional dollar that you earn. So kids, learn your gross margin, learn to love it, calculate it often, watch it like a hawk.
Okay, so this leads me to my next question is, can a successful business still have cash flow issues?
100%. You know how much looking at your bank balance means?
Tell us.
It means zero things. It means nothing. Without any other numbers that appear on your balance sheet, just looking at your cash tells you absolutely nothing. I'm first going to tell you why, and then after that I'm going to tell you why the question you asked me about having like a really big business and growing it can actually lead to cash flow problems.
Yeah.
So when you look at cash, let's say you have $500,000 in the bank. You open your bank account and you're like, yes, look at me. I have $500,000 in the bank, winning at life. that may mean something good, but if you also have $1 million of accounts payable, so vendors you haven't paid, taxes you haven't paid, remittances you haven't paid, all of a sudden that $500,000 is not nearly enough that you need to make your business continue to run.
Right.
So cash only matters as it relates to the other things that are happening in your business. So if you are growing rapidly, you're scaling up, you're growing very rapidly, and you're in a business where you have to pay out costs before you get revenue in, which is a lot of businesses. So for example, if you are in marketing, you have to pay out a lot of salaries and then invoice your clients, and then your clients pay you. So you're paying out a lot of cash before the cash comes back to you. If you're in construction, you have to pay for all the materials and the labor and then invoice your client, and then they pay you. So if you're in a rapid growth phase, the more and more and more and more money is going out before that more and more and more money is coming in. That's just kind of like you have to make it before you can bill it, right? So as a caveat to that, I would say if you're planning for rapid growth and your financial statements look really, really good, I would go apply for a line of credit in your business now, because the bank isn't going to give you a line of credit when you need it, because when you need it, you don't look financially stable. But before you need it, you look super financially stable. So if you're planning to like 10x your revenue or 10x your growth next year and your financials are showing profit, cash flow, all the good things, talk to your accountant. I would apply for the line of credit before you 10x your revenue so that you already have the depth you need to finance those big cash outflows before you can invoice for the big cash inflows. Does that make sense?
Totally. So let's talk about the newer businesses out there, because we're talking about a lot of big numbers. We're saying $1 million businesses, but some of our listeners, just might not be there yet. They might be more in the startup phase. What are some key performance indicators or things that they can watch for? And like, what is normal when it comes to taking money out and paying yourself?
Yeah, for sure. So when we first started our accounting firm way back in the day, one of the partners of the firm said to us, listen, 5 to 7 years, that's what it takes. 5 to 7 years is what it takes to get where you want to be. And I think what he was trying to give us a sense of is to replace the income that we would have made as an employee starting from zero. Like, it takes 5 to 7 years. So if you're in the first year of your business, you've proven out your market, you have great revenue, and you have a loss, that's okay. That's actually pretty normal. I think if you break even in your first year, you're killing it. So I think we really need to make sure that we understand how much it costs to start a business. So I was in a networking group a while ago, and they always say you want to invite startups to this networking group because it costs a business between $50,000 and $100,000 just to start. Wow. And that's like your marketing costs, your logo costs, your accounting costs, like getting the software you need, all of those kinds of things is between $50,000 and $100,000 just to start. So I think the real test is, are you improving every year, right? Most businesses fail in the first 3 to 5 years because people expect to see these big profit numbers at the start, and that's just not reality. Not in most businesses anyway. Like, even if you think of tech companies, they have huge losses before they even go to market. Now, as an accountant, am I saying just like spend all your money and like have a party and then be like, it's fine? No, you want to plan it, right? Like, you want to understand what your startup costs are. You want to plan for that. You want to forecast out reasonably when you're going to start to make profit. And then I would say put yourself on a salary and then increase that 1% a quarter or 2% a quarter or 3% a quarter or 5% a quarter or whatever, so that the increase in salary to you paces with the increase of profitability of your business. But I think, for sure, shoot for the stars or the moon. What's the saying? Shoot for the moon and land in the stars. For sure, do that. But yeah, I think I deal with a lot of startups that turn into very large businesses. I've been in the business a very long time. So I've had the absolute privilege of seeing a startup business that wasn't making anything go all the way to a profitable business. And we never see profit in the first year. Almost never see profit in the first year.
Okay, so if you're profiting in the first year, good for you.
Yeah.
I think on my first year I broke even.
That's killing it.
Or like lost $20 or something crazy. I can't remember. But that was 10 years ago. So, whatever. Okay, I have a game that we can play.
Okay.
It's called Expense or Excuse. And I'm going to list off these expenses, and you can tell me if they're like legit expenses, or you can tell me if it's like an excuse to buy something.
Okay.
Okay. First one is a new laptop.
Expense.
Okay.
Actually, if we're talking about where it goes on the financial statements, which I have to say because I'm an accountant, it's actually an asset because you're going to use it for multiple years. But in terms of this question, absolutely you need a laptop that works as fast as you do to get your business off the ground. Now,
Okay.
if you have a perfectly good laptop that works great and is very fast, and you really just want to buy the pretty pink Apple one that I've been seeing all over Instagram lately, that's like $1 million, maybe that's an excuse. But yeah, of course you need technology to start a business.
You heard it here first. Okay, next one is a $5,000 branding package.
I would say for sure that's an expense. Maybe even an asset, depending on how you want to classify it. But your brand tells the world who you are. And how you show up and the fact that that's consistent for everywhere you show up is really, really important. I think we did that at the start of our business, and it added a level of professionalism that allowed our clients to trust us faster. So I think, people judge you in 3 seconds. That's the stat.
This is true.
And I think that applies to everything about your business, right? How your brand shows up, how your business cards look. I have a thing about how business cards feel.
Mm-hmm.
Like, if you have a business where you charge people, $10,000 a year or $15,000 a year, and you have the cheapest business cards on the planet, like, how is that consistent?
No 12-point business cards, no 14-point business cards if you're charging thousands of dollars.
So I think it's really important. I think it's an expense for sure, not an excuse.
Yeah, I agree with you. As someone who knows marketing, someone has to see you an average of 22 times to do business with you, and I think that only helps excel the trust is when you're cohesive.
Can we just be honest? You legit put that question in there just to see if I would get the answer right? She's testing me.
Yeah.
She's testing me.
I'm totally testing her. Okay, so what about a business coach?
I think it can be either way. I think it depends if you're going to be super committed to the process, if you've done your research in terms of like making sure that they've worked in your industry, that they have the credentials, that they know what they're doing. Then I think it can be super valuable, and it can definitely help you shortcut your success. I think that like who you spend time with and who you have in the rooms with you as you're building a business will take something that would take you 5 years to learn and cut it down to 3. So I definitely think it can be an expense that's legitimate and important for the business. Where I think it can be an excuse is if you don't do your research and you don't hire somebody who knows what they're doing. Or 2, if you hire someone and then don't commit, right?
Yeah.
Like you can't have one foot in and one foot out. So I think that one could go either way. And you really, really, really have to do your research nowadays about the word coach. You have to make sure that you're dealing with someone who knows what they're doing.
Yeah, and can back it. I mean, everybody is like some form of something these days.
Credentials, ask for client referrals, like who else have they worked with that they've helped get success. Like, just be really careful. Be careful on the internet, unlike I was with my shoes.
Yeah. And last but not least, the big fancy office.
Total excuse.
Oh, you heard it here first.
Total excuse. Anyone out there who thinks that they get clients or staff because they have a great view, give me a break. People don't deal with other people because they spend a shit ton of money on an office. In fact, I see it as a little financially irresponsible, to be honest. Granted, I do think if you're in certain industries where confidentiality is key, you need to have a place where you can meet with somebody that is confidential. But here's a cool fact. When I was starting my business, I used to go out and visit a lot of clients because I sublet 2 offices from another business.
Okay.
And I could access the boardroom, and it was a nice boardroom, but I thought, let's go out in the world. And it got me so many clients because the amount of times I heard my accountant has never been here. They don't even know what my office looks like. They have never seen my business. They don't know what I do really. So, and that got me a ton of clients. So really, I could have not had an office and it would have got me the same amount of clients. So yeah, I just think that, if you feel like having a fancy office is needed to support who you are, I would challenge you to just be more confident in who you are, and then you won't need the office. And office space is so expensive.
Yeah, it is so expensive. Okay.
Although, can I just caveat that?
Yeah.
I really do think people work more efficiently in the office. Britt will disagree with me because she's 100% remote, but I have a thing. Like, I have a thing of, like, everyone working together and the culture of getting shit done and accountability and, like, all that stuff. Anyway, another episode. But there are definitely fantastic reasons to have an office, but having a fancier, more expensive one is not necessary.
Okay, great. All right, so now that we know that big fancy offices is just an excuse, I'm moving into the financial honesty 5. If I gave a business owner 5 minutes to look at something every Friday, what are they looking at?
So first they're looking at their profit and loss, and they're going all the way to the bottom line to see if there's anything there. Secondly, and maybe most importantly, they're looking at their gross margin percentage. So their revenue less their direct costs gives us our gross profit, and we want to see if that's increased or decreased. The other thing I like about gross profit is in most businesses, that is really up to date because there's lots of like wages involved and inventory purchases and things like that. So it's probably the truest number on your P&L if you're going to look at it weekly. And then the third thing I would look at is your liquidity ratio or your current ratio. So this is what I was talking about with the cash in your bank account meaning nothing. Instead, you want to pull a balance sheet. Yeah, I know nobody gives the balance sheet any love, but it's very important. And you want to compare your cash, accounts receivable versus your payables. So this is basically like cash and things you can quickly turn into cash versus all the things you have to pay in cash. Top number needs to be bigger than bottom number. And if they're starting to get really close or go in reverse, then you're approaching or already have a cash flow problem. So those are the 3 things that I think will give you a heartbeat on your profitability, your efficiency, and your financial stability in 5 minutes or less.
Okay. Amazing. So everyone has 5 minutes.
Yeah.
So we need to pull these reports, make sure the financial heartbeat of our business is doing good.
Reach out to your friendly neighborhood accountant.
Yeah.
You know, to talk about something cool like prospective things instead of just to say, how can I pay less tax? And I say for sure, if everyone who listens to this podcast does that, you will make the day of like 100 accountants in this world. They will be so happy. There will be tears. They will be singing joyful sounds on the other side of the phone. Like, just make your friendly neighborhood accountant happy.
Yeah. You'll be like their favorite client.
Yeah, 100%.
Because you guys have it rough sometimes.
Yeah. We don't always get to give good news. So when someone asks us something where we can change things in the future instead of just reacting to things that have already happened, like that is where we thrive. That is where the joy lives for us numbers people.
Right. I have some rapid fire money confessionals for you.
Oh, God.
What is one thing you cheaped out on that you later regretted?
Technology.
Okay. Tell us
You know,
more
like,
about
us accountants love Excel and we think we can do everything in Excel. That is fucking not true and it is total bullshit. Come at me, Microsoft. Get the technology that's going to cut your admin time in half. You are the heartbeat of your business. Every second that you spend putting a stupid formula in a stupid cell or not being able to find the information you need at your fingertips is a minute that you're not, like, coaching a team member, getting a new client, leveling up your business.
Okay. So followed up with, what did you spend more money on that made you more money? Or what did you spend money on that made you more money?
That's a good question. I mean, I would say hiring the right people, for sure.
Okay.
I think, you know, when you hire your first employee in particular, it feels like the most money ever.
Yeah, seriously.
You know, you're like, how can they want that much? But honestly, you have to pay people you have to pay them an aspirational amount sometimes. From that, you get loyalty, you get drive, you get all sorts of things. So I think when it comes to your people, making sure they're happy, appreciating them, like, I think you got to spend dollars there because they really are the lifeblood of your business. And if they don't give a shit, like, that's going to filter down to your clients.
Then you're the only one that gives a shit.
Yeah, and that is not a fun place to be, my friends.
No, seriously. Okay, and then what was one thing that you regretted spending money on?
Fucking binders. So when we started Colby Steckly way back in the day, our old firm used to do this thing where they would like print everything off and put it in binders so the partner could review it. And both me and my partner are very good with technology. We don't need to look at things on paper. We could look at things on computers.
Right.
But we're like, let's just start with what we know. So we buy all of these binders so that we can do all of these files and put them in a binder so that we can look at them and then scan them back into the computer. And after like, I think it was only a week, like it was maybe 2 files because we didn't have a lot of clients at that time. I was like, why are we doing this? This is dumb. It's so stupid. We print shit to look at it, to scan it, to get like, I can't. But we had bought all these binders, like so many binders. I feel like maybe it wasn't that many, but at the time we did not have a lot of money. And binders are freaking expensive.
Yeah.
It was probably like 30 binders or whatever. And then I held them in my office empty, taking up space for like so long because I just couldn't just like donate them or get rid of them because I was like, they were so expensive. Anyway, I think we did end up donating them like years after we stopped using them. But, just try something. Don't be afraid to try something new. Don't go buy 30 binders. Just don't do it.
She's like binder PTSD right now.
I do.
Oh my God.
When have you seen a binder in the last like year?
Honestly, I haven't.
They like don't exist. Like who needs a binder?
Kids
Nobody
in school.
needs a binder.
I'm glad you donated them. Okay, so that brings us to the favorite part of our podcast where you summarize this episode in 3 points.
Yeah, okay. Point 1, do that 5-minute financial reflection every week or every month at least. It'll pay you huge dividends. 2, if you're in years 1 to 3 and you're not paying yourself what you used to make at your job or you're, just making a little bit of profit or breaking even, dude, that's super normal. Like show yourself some grace. And 3, the cash in your bank account means 0 things. So let's stop getting all up and excited about like, oh, I have money in the bank. Yeah, but how much do you owe other people? So let's start giving our balance sheet some love. It's an important statement. Accountants didn't just like create it for the good of our health. It means things. And your accountant will help you understand how important it is and how much cool information is in there. Learn to love your balance sheet.
Learn to love the balance sheet. Well, guys, with that said, that wraps up our episode of Finance with CPA Jen. Thank you, Jen, for answering all my questions. So, guys, we want to hear from you. We want to hear your wins and your woes. If you want to shout out on our podcast, please shoot us a message on Instagram. Tell us your wins, tell us your lows, and we'll share it here anonymously, or if you give us permission, with your permission. That being said, follow us on Instagram, YouTube, listen to us on Spotify, Apple, iHeartRadio. You can find us almost anywhere nowadays.
Yeah, which is so awesome.
Yeah. Don't forget to turn on your Instagram notifications because we are dropping something hot coming this fall.
We're going to drop it like it's hot?
Yeah, we're dropping it like it's hot. You just aged us on the internet.
I know, but I love it. It's fine.
All right, guys. With that said, have a great 2 weeks and we will talk to you again soon.
Later, leaders.
Later, Gators.